let's actually start our conversation with Rahul Arora, who's with us here in our studios on Angel and other capital marketplace. Rahul, of course, is CEO of Nirmal Bang Equities. Rahul, good morning. Good to have you with us here. So before we get to markets and everything else, capital marketplace, right up your alley in that sense. What's the sense, Rahul?
So first of all, morning. Thank you for having me on the show, and very happy festivities to you, your team, and your families. Well, on a lighter note, I declared my results to my board yesterday. So it doesn't surprise me with what's happening. I think the listed guys at least give you pre-quarter disclosures. So I think it's been a remarkable 6 months. Our business is a derivative of the mutual fund industry. The more they do, the more they churn, the better for us. It's literally as simple as that. It's all a question of, the SIP flows, really. I think the fact that they're still continuing 25,000 crores a month, you're still seeing, just look at the amount of demat accounts that were there when you went into the lockdown, compare them to what you have today. I think that number is up, 5x, 6x, something like that. So nothing is surprising here. I think, Prashant, in our business, it's purely operating leverage. So my costs move once a year, which is basically when I give my salary hikes. That's my raw material as a percentage of sales is my raw material is my people. And that's true for any player in capital markets. So any incremental activity in the market basically flows straight through your bottom line. So, while I don't want to get too specific into our numbers, I think we're at a 43% ROCE for 6 months.
Wow.
So, you can just imagine theoretically if I was to list in this market, I'd
Rahul
get a reasonable valuation as well. But it doesn't surprise me that, I think you're going to see the same kind of results when Kotak Bank declares. I think you'll see that in Kotak Securities. You'll see that in Motilal Oswal, Edelweiss. Angel's doing remarkably well. I think what they're doing with the digital part of the platform. So CAMS, BSE, NSE, I think in the grey market, you're seeing what's happening to the price of NSE as well. And I think in the unlisted space, it's all going on a whack
What's
with Swiggy.
Have there been any new trends? There are no sellers on NSE.
No, there are no sellers, and that's why, you are having the price sort of artificially jack itself up. And, somebody was telling me recently the CCPS deals of Swiggy were happening at about 350, and the grey market price is about 550. So, if that's the kind of sentiment you're dealing with, then you just want to hold on to capital marketplace. Now, the question is what valuation you want to buy them at, and then that's a question you can ask for any sector. But at this point in time, if I was a holder in any capital market-related stocks, I don't think I'd be selling them at this point in time. The times are good. Even if you do have a correction in the market, I don't see any reason why. Like I said, it's churn at the end of the day. So it's good for business one way or another.
If you're a holder, there's no problem at all in life, like in market in general, right? It's always about people who are trying to sort of, find an entry point into areas where there seems to be good business runway, but then at what price? So therefore, on capital markets, give us that number. What perhaps would be fair value in a sane world?
So, okay, let me put it this way. When HDFC Mutual Fund listed, I think for a 40% ROE, ROC, I think the peak multiple it got was about 48 times, if I'm not mistaken, on a price to earnings. If you go somewhere around 45, 48 times, because these are not very high capex intensive businesses. So you're not going to have inventory, working capital issues. You're not going to have governance related issues. It's a very straight, predictable, simple, seedha sada business. So I think in a good time, you can give it somewhere between 45 to 50 times. I think anything above that may be a little excessive, even if the markets are doing well. And if you get these stocks around 35 times, then it's a great entry point. I think an entry at around 30, 35p and exit around 50, you've more than made your money.
So that's I guess, that's on the broker side, right?
No, that would hold true for asset management. I think even insurance, I think, I think if you look at the last insurance numbers that came out on the private, on the APE side, remarkable. SBI Life was soft, but I think if you look at Max, iPru or HDFC Life, they all grew 25 to 35%. Now, of course, there's a very large ULIP component there, which is also a proxy to capital markets, if you will. Right, it's one of the reasons ICICI Pru Life has always got a slightly lower valuation than the rest, because they've always traditionally had a higher ULIP book, which is sort of more market linked, and that's why, because they've been a little low on protection or the conventional business, their VNB margins have not been as high as their competitors have. So, of course, that valuation gap has caught up. But even today, I think if you look at it on a price to embedded value, all these guys are trading at about 2.5 times. So I don't think anything is that expensive at this point. if you go back 3 months and you peg anything to what defense was trading 3 months back, I think the market is still cheap.
Okay.
But I think there's been a reset in those valuation as well. So would I advise fresh buying into capital marketplace? I'm not so sure, but if you're holding them, I see no reason to sell.
All right. Hi, Rahul. Good to have you in the studio. Since defense has pulled back a little bit, and that was the big call that you all made as well, but valuation still far away from comfort levels for you all?
Well, some have approached interesting levels. I think if you look at a Hindustan Aeronautics is trading at about 25, 27 times now on FY26 earnings. We're expecting about a 25, 30% kind of compounded earnings growth, like in 25 and 26. 27 is too far out to call. See, the good part, Nigel, is that theoretically, if these guys don't even get a single order for the next 2 years, I think their order backlogs are still so strong. The only issue is, are these orders once executed, are they going to see offtake? Because their biggest client is the government of India. So the point I was making a little earlier about inventory and working capital, there is a bit of risk in these businesses as far as that is concerned. But I think names like BEML, which is also down to about 32, 33 times, could potentially be looked at. Data patterns, again, not a cheap stock. Obviously, it's not a public sector as the first two are. That's come down to about 40 times, I think, somewhere thereabouts from almost, 60 times. So I think some of these where we are comfortable that earnings are going to grow at 25, 30%, we are selectively telling people to sort of come in and buy defense names. But it's not a blanket overweight call. It has to be very stock specific. Okay. Valuations could still reset a little bit, but I think that 25, 30% fall, in some cases even 35, my mind goes back to Mazgaon. When it fell 35%, it had 2 days of 88% rally. So I think that goes back to Prashant's earlier point about capital markets, because there's so much liquidity, good quality stocks, you're not allowing them to fall in a meaningful way. So maybe if you get a good 30-35% correction,
some of these could be interesting.
Yeah, I mean, these three names I gave you, BEML, HAL, and data patterns could certainly be looked at.
All right, let's quickly wind this down with the auto sector. Then we have a new IPO, Hyundai. What's the view out there? Plenty of debate, and we'll get to the management in just a bit. But your view?
Well, 14 pages of an anchor book. I think, that itself tells a story. But no, I think obviously, for people who want to play it, I think the biggest risk remains as to what happens from a flows perspective with respect to Maruti, because this is probably a like-to-like comparison. But I think Maruti has withstood so many things thrown at it. The only thing is I don't see too many launches coming up, Nigel. I think even Maruti has not announced too many launches.
Okay.
I think if anything in auto right now, we don't even want to play two-wheelers. I think the CV cycle is virtually topped out. Tractors are doing sort of okay. But I think our pecking order would be two-wheelers one. Within two-wheelers, I think Eicher is what we'd like to play in terms of premiumization. You can follow it up with tractors, M&M, and probably passenger vehicles would be third. But our tilt would still be towards Maruti as opposed to Hyundai. Like I was telling Prashant earlier, valuations in the unlisted space have gone berserk. You've seen what's happening with Swiggy and NSE. So let's see the performance of Hyundai once they live. They've done a remarkable job in India. There's no question with their product portfolio. But we'd still probably prefer a Maruti. But within autos, two-wheelers would be the preference.
Rahul, we promised to get you back, and you must come back, because I was looking forward to a full-blown consumer discussion. There's so much going on with what DMart is saying with quick commerce, what Dabur is saying.
Reliance Retail as well.
Reliance Retail. There's so much to talk about. It will call for at least another 10-15 minutes of conversation. So we'll have you back sooner rather than later. But thank you very much for this morning.
Thank you for having me.